Hey everybody, my name is Matthew Sambanis. I'm a certified public accountant. My firm is based in Long Island, New York, and in today's video we are going to discuss the U.S. debt crisis. I'm going to look to explain it as simply as possible. I'm a certified public accountant. I've been an accountant for over 20 years now. My firm is based in Long Island, New York. This channel is dedicated to economics, the economy, finance, making money, the stock market, and other things of that nature. So if that's what you're into, please be sure to like, comment, and subscribe. So without further ado, I found this article the other day on zerohedge.com. And, it comes down to that there's two economies out there, right? And it's causing a lot of confusion. So first part is inflation. And inflation is the printing of the money supply. And what happens is as we print more and more money, the dollar loses value, which is why we've seen an increase in the value of gold and an increase in the value of silver, and a decrease in the dollar's purchasing power, which is the result of inflation. So more money gets you less goods, and then you also have the other factor of shrinkflation. So right now, the U.S. deficit is at $35 trillion, which is an astronomical number. I'm not even getting to the economics of how much that breaks down to per state, per citizen, per capita, etc. I will point out, though, that does not include unfunded liabilities, pensions, Social Security, other things of that nature, nor does it even include the states and their debts, including California, who owes out about $150 billion. So you have major issues here. We have not even just in the U.S., which is what we're going to focus on, but the whole world is in debt. It's just we have one huge big debt bubble, and at some point, every bubble has to pop, right? You have the government debt, you have the national debt, you have the government deficit, and all these things are actually causing more and more inflation. And then we have the individual consumers in the country, in America, which, credit card debt is at an all-time high. Interest rates are at an all-time high. Auto loan debt is at an all-time high. Mortgages are at an all-time high. Mortgage interest rates are technically not at an all-time high, but they're at a high comparatively speaking. They're still too low historically, and they're too low to actually combat inflation, which is why we haven't seen it going down substantially. Well, I guess it's gone from supposedly 9% to 3%. I think it's more like 20% down to 9%. We'll touch on that in a little bit. And then you have student loan debt as well, which is, another crushing number. So you have a ton of U.S. citizens just being crushed from all sorts of debt from every angle. And, you hear the Federal Reserve talking about inflation, saying, hey, we're getting it under control. We're getting it under control. You have the White House saying that they have it under control. And then you hear businesses and individuals saying that they're getting crushed by inflation. They're getting crushed by shrinkflation. The quality of everything's gone down substantially. And consumers are struggling. And that also explains the dynamics of why credit card debt is at an all-time high. Savings are being depleted more and more. And, the Federal Reserve's target is 2% inflation, right? But it goes to my simple analogy, which is what I've said over and over. Do you want to pay more for something, or do you want to pay less for something? Of course you want to pay less for something. Do you want to spend $10,000 on a used car, or do you want to buy that same used car for $20,000? Of course, you want to spend $10,000 on a used car, just like when flat screen TVs came out and they were thousands of dollars. Now they're only a couple $100s. And that there is the economy, that's finances, that's business, that's capitalism, right? Not the government involvement, not the government setting interest rates. And, the other issue that keeps on coming out is, conflicting numbers, right? Conflicting numbers, case in point, unemployment numbers are at an all-time low, but the numbers keep on going up, and then the job reports keep on coming out with stellar reports, but every month they keep on getting revised down for the previous month, and nobody cares about that. When you go to the grocery store, the government says, the cost of food's up only 2 or 3%, but you and I both know that we're the ones actually going. We're not working off of some concocted numbers, and it's more like 5, 6, 7, 15, 20% higher, especially from 2020. So, in the article here, they refer to that as confusion. Let's just call it what it is, lies, right? And another issue that's going on is the interest expense on all of this debt is now at all-time highs because interest rates went from 0% to 5%. And, the government keeps on spending more and more money. They're spending money like drunken sailors to no end. And it's just, again, what other country in the world taxes their citizens to send us money? Right? But that's what we do. I'm not even going to tell you how big my tax bill was last year. It was absolutely vile. It makes me want to vomit. I know I spent more than $100,000 in taxes alone last year, and that should just be legal. I know that's small fries to a lot of people. That's also big fry. That's more than I thought I would ever have to spend. And then when you factor in property taxes, sales taxes, New York State income taxes, FICA taxes, Social Security taxes, Medicare taxes, federal taxes. I mean, the list goes on in the way that I'm literally just being taxed from every flippin' angle. And you know what? I'm going to go off on a tangent here. But the bottom line is my money is being spent, with all due respect, on the Ukraine. Why is my money going to the Ukraine? Shouldn't it go to somebody that's stateside? Shouldn't it go to a veteran? Shouldn't it go to my neighbor across the street who maybe is in Financial Times or something? Like, why is my money going to the Ukraine? Exactly. What else is going on? Commercial real estate is cracking, and the problem with that is regional banks have a problem, especially smaller banks. Believe it or not, there's, I believe, only 3,500 or 4,500 banks in the U.S., but most of them are small to medium size, and those are the ones that actually have the most commercial real estate debt. So at some point, that bubble's got to pop. And another issue out there that a lot of people haven't discussed is Treasuries, right? So imagine you're Apple, and a few years ago you bought Treasuries when they were yielding 0% or 0.2% or 2% because that was considered a good rate at the time. Now they're 5%. So what happened if you didn't sell that? Now, if you go to sell it, you're going to realize a huge loss on those Treasuries, or you keep it for 30%. And on top of that, you have to pay tax on the interest you collect. So you're losing money to inflation up the wazoo. So you have a ton of unrealized losses sitting on corporate balance sheets before we even go any further than that. And then we have a stock market bubble right now. We have a crypto bubble right now. We have an overall debt bubble. You have the auto loan crisis, the student loan debt crisis, medical loan crisis. People can't, housing starts are caressing. You have, just everything, going downhill, and we're running $2 trillion deficits, and we're not even in a recession right now, right? So we're not in a recession, and the government is running a $2 trillion deficit per year. It's not sustainable. And what else? $35 trillion in debt is 120% of GDP. And the bottom line, simple math, is if you're a country with debt over 120% of your GDP, eventually your currency is going to fail. So I could keep on going on and on, but basically, gold is going to shine here, silver is going to shine here. The stock market will probably continue to go up because more and more money is being printed, but it's in nominal terms, but it's fictitious. Right, it's going to continue to go up because the government's going to continue to print money. The debts are, deficit's going to continue to rise. Everything else is going to continue to go up, and ultimately we're going to be toast. Right, we're going to be some third world country, which is what we're marching towards today. You know that, I know that. So anyway, if you want to protect yourself, watch some of my other videos. Please be sure to like, comment, and subscribe. And just going back to what I was saying, I've been buying a lot of gold stocks, a lot of silver stocks, and a lot of foreign stocks and hard assets. So again, I'm just some dude on the internet, and take whatever you want, leave the rest if you don't agree with it. But I'd appreciate a comment either way, and hope you have a great rest of the day. Thanks.